Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. There's been so much talk this year about house prices as they drop back following the pandemic era boom. Today, I wanted to have a closer look at what this means now for investors in residential properties, when we'll start to see them returning to the market, and where the opportunities might be around the country. ASX-listed Halo Technologies is a global equities research and trade software platform. It's now launched Halo Property. Halo Property is being headed up by Warren Hogan, former Chief Economist at ANZ. Warren, welcome to Fear and Greed.
Thanks for having me on the show, Sean.
You've had plenty of experience in forecasting the economy and markets. So, the $64 question, what's the property market going to do next year?
Well, unfortunately, I don't think there's much good news, at least not in the first half of the year. I think we're going to continue to see prices slide. Even if the RBA stopped raising interest rates in 2022, it's a illiquid, high transactions cost market, and the current level of the mortgage rate at the end of 2022 will probably still need to be factored into the prices into the first sort of few months of next year. So we'll probably still see falls then. And I actually don't think the RBA will stop raising rates. So, yeah, a tough start to the year. But there is no such thing as the Australian property market. It's just more a fascination for us economists. There's lots of different markets, and some are going to be a lot more difficult than others. And there is even some markets in Australia that represent some value.
Okay, so I want to get into Halo itself in a moment, but while we've gone down this particular rabbit hole, everyone wants to hear about it. So where is their value within the market?
Yeah, so we use fundamental valuation techniques based on household income and then use interest rates for the cycle. And from an income, we use a long-term income anchor, both at the national and then at the state level. And really, this boom has been an eastern seaboard boom. So across WA, both in Perth and in the regions, as well as Northern Territory, which I know is a very small market, but those markets, they went up in the pandemic, but nothing like the East Coast markets. And they had a poor decade prior to the pandemic as well, where they really struggled, this hangover from the mining boom era. So those markets actually are at fair value. So right. I wouldn't sort of hesitate to recommend it, particularly an owner-occupier or an investor with a long time horizon, to be looking at those markets now. And then in the East Coast, there's some pockets. Apartments are getting close to only being a little bit expensive in the major capital cities, particularly Brisbane, that also struggled pre-pandemic. But most of the East Coast is pretty expensive. Okay, so
apartments, they didn't run up as hard, obviously, and they haven't fallen as hard. Is that I once said, is it a rational market? But someone said, if there's a buyer and a seller, it's always rational. So I'm not allowed to use that term anymore, I don't think. But they just didn't run as hard. Is that basically what it boils down to?
Well, the pandemic had sort of two big impacts on the housing market. One, interest rates, which we all know. And then the other one was there was a shift in housing preference, and that was the result of the pandemic directly. People wanted to live in houses rather than apartments. We saw a big shift to the regions, particularly close to the major capital cities. So, yeah, apartments didn't run up anything like houses did in the major capital cities. And the interesting thing in 2022 so far is apartments in Sydney and Melbourne in particular have come off, even though they didn't run up as much. So in terms of evaluation, I think by sort of March next year, Sydney and Melbourne apartments, and this is obviously a general valuation across the whole of the city, big cities, but those markets will be the cheapest relative to income they've been for a decade. And, that's actually not a bad time to get into, what are otherwise pretty expensive markets.
Yeah, what are investors up to? So we talk a lot about owner-occupied, but what about investors? Are they in the market yet?
No, the data we have on new lending shows that investors are in retreat every much as first home buyers and the owner-occupiers, upgraders and downgraders and so forth. And the history shows, quite perversely, I think, that investors too tend to be quite pro-cyclical. So they tend to be buying when times are good and selling when times are bad. And you'd think that, experienced investors would go the other way. That is, that they'd be looking for value when everyone else is running for the hills and so on and so forth. So I think you're going to find the investor market come to life before the owner-occupier side really turns around. But at the moment, the last data we had was for, I think, September. But even, I think, into the end of 2022, investors are pretty quiet. But there's a lot of things going for them, not just the fact that prices are coming down and valuations are getting better, but they're still expensive, but better. but also that rents are going up. So yields are really starting to move in their favour as well. So I think the investors will come back in 2023, assuming we don't have an economic catastrophe, because history shows that when the economy really turns down hard, investors do tend to take fright.
Does it come down to interest rates? Is it as simple as that?
I don't think it's as simple as that, but interest rates are the all-dominant feature of housing in Australia, whether you're looking at investors or owner occupiers, in particular in terms of volatility. That is what house prices do from year to year. But investors, as I said, they tend to be pro-cyclical, and I suppose that reflects the fact that people invest when they're confident and when they have money, and that tends to be when the economy is good and vice versa. But as we know from professional investing, that's not the right way to do it. The right way to do it is to be buying when everyone else is selling and vice versa. So whether that's going to change or not, but I think the confidence element's a really important one, and there's just so much uncertainty out there. You can look at that on a global basis, or looking at here in Australia. You can look at it in terms of markets, or you can look at it in terms of the economy. There's still a lot of uncertainty, and that's because of the inflation shock. And I'd add on to that a lot of big structural things like geopolitics and climate change are also playing a role.
Stay with me, Warren. We'll be back in a minute. My guest today is Warren Hogan, Economic Advisor to Halo Technologies. Okay, Warren Hogan. So Halo Technologies, it's a global equities research and trade software platform. I said that. Explain that to us and a little bit more about Halo Property.
Yeah, so it's an Aussie company listed recently, strong heritage in equities, developed very, very rigorous analytical platforms that allow essentially retail and high net worth investors access to institutional grade analytical capacity. Basically, it's really aimed at people who want to do a bit of homework themselves. And then, of course, on the equity side, you can transact. You can't do that in Halo Property. It's more just the analysis there. And, it is a bit of a, not so much do it yourself, but it's not about making decisions for people. It's about helping them make better decisions. So it appeals to not just, the end investors, but also some of the intermediaries out there. And Halo Property is very much about the journey. It's about watching and monitoring the market, the property market. And I would argue that property, more than equities or bonds or, liquid financial markets, it's more important to get your timing right, to make your decisions right, because it's a really expensive market to reverse your trade if you make an error. So the transactions costs are so high, and the ticket size, our individual properties are big, although we are looking at other sorts of ways to get people access to property, but that's all work in development.
So just talking about that, there are lots of alternate ways to get people into the market. Are there any that you're particularly drawn to? And I suppose it's not just your work at Halo Properties, but you are Chief Economist at ANZ. You have a wealth of experience. The government obviously wants to do something with super funds. There are others who have startups trying other ways of getting people into the market. Kind of where do you stand on that?
Well, the reality of the Australian market in the big picture is that we rarely have an oversupply of property, maybe at a suburb or a regional level on occasion, but we tend to be a very efficient market that is a price signal driven market, albeit with lots of regulation around it. But what that means is that you sort of have an undersupply emerge, prices go up, and the construction industry responds. And what that means is you never get excess housing, which is good, because when we have downturns, they're short-lived, unlike, say, after the GFC in parts of America or Spain and other parts of Europe, you saw oversupply, or China right now, massive oversupply. But then to deal with the issue of affordability and other issues that the government's looking at does require supply. That's all there is to it. There's no substitute for supply in a market that's expensive. So look, that's not, we're obviously going to be part of that conversation, but at the moment we're just trying to improve the knowledge levels of people participating in the market. And I think that the more investors involved in property, the better. It's not a hard sell in Australia. The property market is a long-standing investment strategy for Australians going back generations. So we're just trying to bring institutional grade analytics to investors in the market, give them some patience to know when to trade, what the right time is, what the right place is, broaden the horizons, like just don't look in Sydney or Melbourne, look, is there opportunities in Perth or Tasmania? And I think also the unique proposition is the macro, which I'm doing, right through to the detailed core logic data at suburb level. And we are going to try and progress it even further to individual properties if we can. But it is that all through end-to-end analytic proposition, which I haven't seen in the market, having a very cohesive macro view and a forecast. We do forecasts. We don't live and die by them. We adjust them as we need to. We use them as a benchmark, but all the way from the macro right through to that detailed suburb level transactions data.
Warren, I can't let you go without asking you, peak to trough, how far will the market fall?
Well, look, on the basis of my view on the cash rate, I think we're going to see the national market down somewhere between 24 and 27%.
Oh, wow.
I've got a cash rate going to 4.35% by the end of next year. But if you take the consensus, which is what I do in Halo, I wouldn't inflict on people my views of interest rates.
Fair enough.
Although it will come through in the webinars. There won't be no one will be die wondering. But in terms of our analytics, the central case that we use is essentially my assessment of consensus for everything from interest rates to income growth. And that's a skill I bring to it because it is a skill developed over many years in markets. And on that basis, the consensus view from Halo on the national market is a fall of about 20%, and that the property market remains expensive, although property prices are a lot lower than where they are today, before we start to see a rise over the medium term.
Warren, thank you for talking to Fear and Greed.
Thanks for having me, Sean.
That was Warren Hogan, Economic Advisor to Halo Technologies. This is the Fear and Greed Daily Interview. Remember, this is general information only and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.